Welcome back to Iraqi Dinar Alert. Today, we're diving deep into a critical question. Can the relationship between Iraq and the United States actually strengthen the Iraqi dinar? You see, the dinar's value isn't just about oil prices or local politics. It's deeply connected to Iraq's global partnerships, and none is more important than its ties with the USA. Let's explore how this complex relationship works and what it means for your dinar. The story between Iraq and the US is one of conflict, cooperation, and everything in between. After 2003, America was heavily involved in rebuilding Iraq's economy and financial systems. This support helped stabilize the dinar in the early days. Now, the relationship is more about diplomacy, security, and economic cooperation. When things are good between the two countries, the dinar tends to be stable. But when tensions rise, uncertainty hits the market, and the currency feels the pressure. So, how exactly does the US impact Iraq's economy? First, let's talk about oil. Iraq sells its oil in US dollars, and these earnings are deposited in accounts monitored through American financial channels, like the Federal Reserve Bank of New York. This gives the US indirect influence over how easily Iraq can access its own money. Second, the US Treasury keeps a close watch on dollar transactions to prevent money laundering and sanctions evasion. When Washington tightens the rules, the supply of dollars inside Iraq can shrink, which often weakens the dinar against the dollar on the local market. On the flip side, the US also collaborates with the Central Bank of Iraq to modernize its financial system, helping to strengthen its economic foundation. And let's not forget security. A stable security environment, supported by US cooperation, is essential for attracting investment and calming market fears. This is why diplomacy is so crucial for the dinar. Strong ties with the US can mean smoother access to Iraq's dollar reserves, which helps keep the dinar's value closer to the official rate. Good diplomacy also reduces the risk of Iraq getting caught in financial restrictions meant for other countries, creating a more stable economic environment. Plus, positive relations act like a green light for American investors in energy, tech, and construction. This foreign capital injection is a huge boost for the dinar. But even with perfect diplomacy, Iraq faces its own internal hurdles. Over 90% of the government's money comes from oil. This makes the dinar extremely vulnerable to global oil price swings. Political instability and corruption also scare off investors and erode international trust. If the US spots financial violations, it can tighten controls on dollar transfers, which directly hurts the dinar. Iraq's location, surrounded by regional powers, also makes it a tricky balancing act. So, what could stronger diplomacy achieve? It could lead to a more predictable supply of dollars, reducing black market pressure and keeping the exchange rate stable. With US partnership, Iraq could accelerate its financial reforms, improving transparency and making its banking system more robust. A better investment climate would bring in more dollars, create jobs, and build a stronger private sector, all of which support the dinar's value. But can diplomacy alone make the dinar skyrocket? The honest answer is no. Diplomacy is a powerful supporter, but it can't replace the hard work of internal reform. For the dinar to truly strengthen long-term, Iraq needs to diversify its economy away from oil, ensure political stability, fight corruption, and build strong, independent institutions. Diplomacy creates the right environment for these changes to succeed. Looking ahead, if Iraq and the US continue to strengthen their ties, we can expect more stable access to dollars, ongoing financial cooperation, and a better international credit rating for Iraq. All of these factors would support the dinar. However, if relations weaken, Iraq could face stricter dollar regulations and a wider gap between the official and market exchange rates. The future of the dinar is undeniably linked to the path of Iraq-US relations. In conclusion, strong diplomacy is a critical piece of the puzzle for a stable Iraqi dinar. It paves the way for financial security, investment, and growth. While it's not a magic bullet, when combined with genuine internal reforms, it offers Iraq the best chance to build a stronger, more stable currency for the future. Have you ever wondered what really drives the value of the Iraqi dinar? It's not just oil or what's happening inside Iraq. A huge piece of the puzzle is Iraq's relationship with the United States. For the past 2 decades, the ties between Baghdad and Washington have shaped everything from security to banking. And today, that diplomatic relationship directly impacts the strength of the dinar. Let's break down how this works. It all goes back to the post-2003 era when the U.S. helped rebuild Iraq's financial institutions, including the central bank. Back then, it was about military support, but now the relationship has shifted. Today, it's all about economic influence. Think about it. Iraq is a major oil producer, but where do all those billions of dollars in oil revenue go? They're held in accounts tied to the U.S. financial system. This gives the United States a powerful indirect say in Iraq's economy. So, how does this influence play out? First, there's control over dollar movements. The U.S. Treasury oversees how dollars from oil sales are accessed by Iraq. If the U.S. tightens the rules, fewer dollars flow into Iraq's markets. When dollars become scarce, the value of the dinar goes down against the dollar. This is why you often see a gap between the official exchange rate and the black market rate. Second, there's oversight on financial standards. The U.S. monitors Iraq's banking system to prevent money laundering and other illegal activities. If Iraq doesn't meet these international standards, the U.S. can restrict its access to dollars, which again weakens the dinar. On the flip side, when the U.S. helps Iraq modernize its banks with things like digital payments, it builds trust and helps stabilize the currency. Security is another key factor. A stable Iraq attracts investors. U.S. cooperation on counterterrorism helps create a secure environment where businesses feel safe to invest. More investment means more foreign currency coming into the country, which strengthens the dinar. So, you can see how diplomacy becomes a powerful economic tool. When relations between Iraq and the U.S. are good, a few things happen. Iraq gets easier access to its dollar revenues, which helps the central bank keep the exchange rate stable. It also reduces the risk of sanctions and builds trust with foreign investors. The more companies are willing to invest in Iraq, the stronger its economy becomes. Of course, the U.S. relationship isn't the only thing that matters. Iraq has its own internal challenges. It's heavily dependent on oil, so a drop in global oil prices puts immense pressure on the dinar. Internal political disagreements and corruption also make markets nervous and can slow down economic progress. These issues often lead to stricter U.S. monitoring, creating a cycle of financial pressure. So, what's the path forward? Stronger diplomacy with the U.S. could lead to a more reliable supply of dollars and faster financial reforms, like implementing electronic invoicing and modernizing banking procedures. This would make the system more transparent and reduce opportunities for manipulation. Positive relations also encourage more investment from American and international companies, which helps diversify the economy away from oil. But let's be clear. Diplomacy alone can't fix everything. It creates the right environment, but Iraq has to do the hard work internally. This means diversifying the economy, fighting corruption, and strengthening its own institutions. Looking ahead, the future of the Iraqi dinar is closely tied to how Iraq and the United States manage their relationship. If they deepen their partnership, we could see a more stable dinar, greater investor confidence, and a shrinking gap between the official and parallel market rates. However, if relations sour, Iraq could face even tighter restrictions on its dollar reserves and more market volatility. In the end, the connection between Washington and Baghdad is a powerful force shaping Iraq's economic future. Strong diplomacy opens doors to financial stability, but real, lasting strength for the dinar will only come when international cooperation is matched by solid domestic reforms. It's a two-part equation for building a resilient Iraqi economy. Have you ever wondered what really drives the value of a country's currency? For Iraq and its dinar, the answer is a complex mix of oil, politics, and one particularly powerful relationship, its ties with the United States. Many are asking if stronger diplomacy with the US could be the key to unlocking a more stable financial future for Iraq. Let's dive in and explore how this international connection shapes the dinar's destiny. The relationship between Iraq and the United States has evolved dramatically since 2003. It has moved from military engagement to a partnership focused on economics, security, and diplomacy. Today, the U.S. plays a significant role in financial oversight, anti-corruption efforts, and even monitoring how Iraq uses its foreign currency. Because of this deep connection, decisions made in Washington can have a direct impact on the Iraqi economy and the value of the dinar. So, why does the U.S. have so much influence? It really comes down to how global finance works. First, Iraq's economy runs on oil, and nearly all of its oil revenue is paid in US dollars. These dollars travel through international banking systems that are heavily regulated by the United States. This means the US Treasury can essentially control the flow of Iraq's own money to prevent misuse or money laundering. If they see something they don't like, they can tighten the rules, which slows down the flow of dollars into Iraq and makes the street exchange rate for the dinar go up. Think of it like a faucet. When diplomatic relations are good, the faucet is open and dollars flow smoothly. This gives Iraq's central bank the resources it needs to keep the official exchange rate stable. But when there are tensions or concerns about corruption, the US can turn that faucet down, creating a dollar shortage in the market. This is where diplomacy becomes a powerful tool for stability. Strong cooperative ties with the US build financial confidence. When international markets see the two nations working together, they feel more secure. This encourages foreign investment, which brings in capital and strengthens Iraq's economic foundation. Furthermore, the U.S. provides technical support for modernizing Iraq's banking system. By helping implement things like electronic payments and better anti-money laundering measures, they help build trust in the dinar itself. Of course, diplomacy isn't a magic wand. Iraq still faces huge internal challenges. The country is almost entirely dependent on oil exports. When global oil prices drop, the dinar suffers. Political instability, internal power struggles, and persistent corruption also scare away investors and create economic chaos. If funds are being misused, the U.S. will step in with tighter restrictions, and the cycle continues. Iraq is also located in a tough neighborhood, constantly balancing relationships with rival powers. A single diplomatic misstep can have immediate financial consequences. So, how can better diplomacy lead to a stronger dinar? If Iraq continues to build a solid relationship with the US, we could see a more consistent supply of dollars entering the market. This would help close the gap between the official and black market exchange rates, boosting public confidence in the dinar. It could also open the door to new economic partnerships, like joint infrastructure projects and trade agreements that create jobs and bring in new technology. When the world sees Iraq as a reliable and transparent partner, its currency and financial system gain credibility. But let's be clear, diplomacy alone won't revalue the dinar. It simply creates the stable environment needed for real change to happen. The heavy lifting has to be done at home. Iraq must diversify its economy away from oil, support local industries, reduce its reliance on imports, and most importantly, get serious about fighting corruption. Diplomacy lays the foundation, but domestic reforms build the house. Looking ahead, the path is clear. Continued cooperation can lead to more predictable access to dollars, stronger economic partnerships, and renewed investor interest. But if that relationship weakens, we could see tighter restrictions and a wider gap in exchange rates. Ultimately, the future of the Iraqi dinar isn't just about oil prices or internal politics. It's also a story of international diplomacy. By combining smart diplomacy with bold domestic reforms, Iraq has a genuine opportunity to build a stronger economy and a more stable currency for its people. Have you ever wondered what really moves the Iraqi dinar? Behind every shift in its value, there's a complex mix of politics, global economics, and international partnerships. One of the most significant factors is Iraq's relationship with the United States. Could better diplomacy with Washington actually help strengthen the dinar? Let's break it down. For over 2 decades, the US and Iraq have built a multifaceted partnership. After 2003, the US was deeply involved in rebuilding Iraq's financial and political structures. Today, that relationship has shifted from military operations to economic cooperation. They work together on banking oversight, energy coordination, counterterrorism, and trade. Most importantly, they collaborate on regulating the flow of US dollars, which directly impacts the dinar's stability. So, how does the US influence Iraq's currency? First, Iraq earns most of its money by selling oil in US dollars. These revenues flow through international banking systems monitored by American regulators. Any concerns about misuse can slow down or restrict Iraq's access to its own money. Second, to prevent illegal activities, the US Treasury keeps a close eye on many of Iraq's dollar transactions. When problems are found, the supply of dollars entering Iraq shrinks. With fewer dollars available in the local market, the dinar's value naturally weakens against the dollar. Third, the US also supports Iraq in modernizing its financial system. This includes improving payment platforms, upgrading banking software, and strengthening anti-fraud rules. These updates make the currency less vulnerable to manipulation and help stabilize its value. Finally, security cooperation plays an indirect but vital role. When security is stable, investors feel more confident. U.S. support for Iraqi security forces helps create a better economic climate, which boosts public trust in the dinar. This is why strong diplomacy is so critical. A relationship built on trust leads to real financial benefits. Good communication ensures Iraq gets the dollar supplies it needs for trade and banking, which helps keep the street exchange rate closer to the official one. It also reduces the risk of financial restrictions that could harm Iraq's economy. A positive relationship makes Iraq a more attractive place for foreign investors, whose investments can support the dinar's strength. Of course, diplomacy isn't the magic bullet. Several internal challenges still hold the dinar back. Iraq's economy is over 90% dependent on oil, making it vulnerable to price drops. Political uncertainty and corruption also scare away investors and lead to tighter U.S. monitoring, which can reduce dollar availability. So, what would happen if diplomacy improved even further? It could lead to a more predictable supply of dollars, reducing black market pressure. It might encourage more American companies to invest in Iraq's energy, technology, and infrastructure sectors, creating jobs and strengthening the economy. It would also make it easier for Iraq and the U.S. to work together on critical financial reforms, like creating transparent transaction systems to fight corruption. A stronger global reputation would follow, improving Iraq's credit ratings and attracting more foreign funding. Ultimately, even with perfect diplomacy, the dinar won't achieve long-term strength without serious internal reforms. Iraq must diversify its economy away from oil, tackle corruption, and make its banking system more transparent. Diplomacy opens the door, but Iraq has to walk through it. Looking ahead, the path is clear. If Baghdad and Washington continue to build a constructive relationship, we could see more efficient dollar transfers, greater financial stability, and a healthier future for the dinar. But if relations weaken, we could see the opposite: tighter controls, a more volatile market, and a weaker currency. The future of the Iraqi dinar is tied to both its friendships abroad and its reforms at home. By balancing both, Iraq can build a stronger economy and give its currency the chance to thrive. When we talk about a currency's value, we usually think about economic factors like inflation or trade. But sometimes, a currency's fate depends just as much on politics, diplomacy, and international alliances. This is especially true for the Iraqi dinar. The dinar has long been influenced by global relationships, and none is more crucial than Iraq's relationship with the United States. So, could improved diplomatic ties with the US actually help stabilize the dinar? To answer this, we need to dive into how politics and economics intersect in Iraq's unique situation. The partnership between Iraq and the United States has evolved significantly since 2003. In the early days, the US was heavily involved in rebuilding Iraq's political and financial systems. This cooperation directly affects Iraq's currency. So how exactly does the US influence Iraq's financial world? Well, even though Iraq is an independent nation, its economy is deeply connected to a global financial system largely regulated by US institutions. First, Iraq sells its oil almost exclusively in US dollars. These oil revenues flow through international banking systems that are subject to American financial regulations. If there are any concerns about transparency or money laundering, access to these funds can be slowed down. Second, the U.S. Treasury monitors dollar transfers to ensure they comply with international laws. When this monitoring gets stricter, fewer dollars make it into the Iraqi market, which pushes the value of the dinar down against the dollar. Third, American institutions often help. Iraq modernize its banking sector by updating technology and strengthening anti-money laundering systems. These reforms are essential for building trust in the dinar. And finally, security cooperation helps create a stable environment, which is something investors watch very closely. This is why diplomacy is so critical for currency stability. Good diplomacy creates predictability. When Iraq and the US maintain steady communication, market confidence goes up, and the pressure on the dinar goes down. Consistent diplomatic ties can lead to a smoother supply of dollars, which helps narrow the gap between the official and street exchange rates. Strong diplomacy also lowers the risk of financial restrictions or sanctions, which is vital since Iraq imports most of its goods. Plus, international investors feel much more comfortable putting money into countries with strong diplomatic relationships with major global powers. Like the US, of course, even with great diplomatic ties, there are major internal obstacles holding the dinar back. Iraq's economy is heavily reliant on oil, with over 90% of government revenue coming from it. This makes the economy and the currency vulnerable to global oil price swings. On top of that, political uncertainty and corruption remain serious concerns. Any sign that funds are being misused can lead to tighter American oversight, which again reduces the flow of dollars. So, how can improved diplomacy help? While it's not a magic bullet, stronger cooperation with the US can create the right conditions for long-term improvement. For one, it could lead to greater stability and the availability of dollars. When relations are good, the US is more likely to trust Iraq's financial processes, meaning fewer restrictions on dollar transfers. This directly stabilizes the dinar in everyday markets. Better diplomatic ties also open the door for more American and international investment in sectors like infrastructure, technology, and transportation. This brings foreign currency into the country, which supports the dinar. And a strong partnership with the US boosts Iraq's reputation with global banks and credit agencies, leading to better borrowing terms and more investment. However, it's crucial to remember that even the best diplomatic partnership can't fix internal economic problems. For the dinar to truly grow stronger, Iraq must focus on its own reforms, expanding non-oil industries, encouraging private sector growth, and improving transparency. Diplomacy creates the right external environment, but domestic reforms provide the foundation. Looking ahead, if Iraq and the US continue to strengthen their ties, we could see a steadier supply of foreign currency, smaller gaps between exchange rates, and more foreign investment. But if relations weaken, Iraq could face tougher access to its dollar reserves and increased economic volatility. The direction of U.S.-Iraq relations will continue to be a major factor for the dinar's performance. In the end, a stable dinar requires a two-pronged approach. strong international cooperation combined with serious internal economic reform. If both move in a positive direction, the Iraqi dinar could gradually gain the stability it needs for the years to come. Thanks for watching. If you found this video insightful, don't forget to like, share, and subscribe for more content on global economics and finance.